with where they're at with inflation, it's still much above the 2% number that they target. It's much above, or a little above, I should say, the rate of inflation we would have expected for this year. And so I think the market has gotten off to, well, it started to kind of go off to the races, but I think it's at this point probably false started as we're starting to see those gains being given back. And it's hard to think that Jerome Powell is going to be able to do as many interest rate decreases as the market seems to be pricing in right now.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, so Fed has pivoted. Powell has reversed course. So it would appear, at least that's what they've announced. They haven't done it yet, but the markets have reacted in such a way. Rates are down. Mortgage rates are down substantially and probably heading lower. Hey, got somebody here that you definitely going to want to pay attention to. Financial expert Ted Thatcher. Ted, it's great to have you on the show. And hey,
Great to be with you.
yeah, hey, and I should mention that you find Ted at pinebrookfinancial.com. If you got a question for Ted or myself, shoot me an email, kl@kerrylutz.com. So we had a Fed that up until last month was staying the course. They weren't going to, rates were going to stay high. The banking industry be damned, the regional banks, we don't need them anyway. And, they're seeing a global implosion, much due in part to the Fed's so-called aggressive, hawkish stance towards rates. All of a sudden, one day, it's like Jerome Powell's Rip Van Winkle. He wakes up and finds out that the world is like crumbling around him. And the global financial system is headed for the skids. And it says, oh, time to change course. How can you be
Right up to the brink of the edge.
Yeah. How can you be confident in a person like that?
Well, to be candid, I don't know if you can be extremely confident in a person like that, Kerry. I think, looking at the CPI numbers that just came out, Jerome Powell changing course now, it's interesting to me. I think, so just so everybody knows out there, the CPI data came out this morning. We're at 0.3% for December. On the year, that puts us at 3.4%, measured by the CPI, which you and I know we could have a long conversation about whether that's a reasonable measure of inflation or not. And, of course, with that, where Jerome Powell goes from here is kind of what I'm thinking about. Because to your point, he started to change his tune last time the Fed met. And of course, they meet again here at the end of January. And what I am going to guess here is that he is going to keep that tone of complete optionality. We remember the word transitory that they kept throwing at us so often in the early part of 2022. And, we've heard higher rates for longer than we'd like. We got the Fed meeting last month. And of course, Jerome Powell started hinting at a couple interest rate decreases, but with where they're at with inflation, it's still much above the 2% number that they target. It's much above, or a little above, I should say, the rate of inflation we would have expected for this year. And so I think the market has gotten off to, well, it started to kind of go off to the races, but I think it's at this point probably false started as we're starting to see those gains being given back. And it's hard to think that Jerome Powell is going to be able to do as many interest rate decreases as the market seems to be pricing in right now, with inflation higher than, we expect and higher than they target.
He said 3 cuts. The market immediately upped it to 6. But hey, as long as the rates aren't going higher, I think that makes a bullish argument, perhaps. But the transitory thing, going back to that, we have a saying here: the best things in life are transitory, right? So that was just a focus group driven or a narrative that I think you were skeptical of from the very start, as were we, as were thinking people. But Wall Street doesn't really care about logic or reason or logical outcomes. All it cares about is getting on the right side of the trade, right?
Well, sure. Yeah. Of course, the Wall Street's known for that word that starts with a G, right? Greed. And so they want to be on the right side of the trade at all times. And, as far as sort of where we go from here and where we look for opportunities, even in, our discussions with clients on a daily basis, we're talking about where to find opportunity right now. I'm sure a lot of those listening and watching are doing the exact same. And we start to think about harder assets. Real estate comes to mind immediately. We've talked a lot with folks in the past, even couple weeks about where commodities are sitting today. A lot of cash, as you well know, of course, with rates higher, has been sitting on the sidelines. And so as rates come down, as that cash starts paying less of a premium, I think that looking at commodities as well starts to make a whole lot of sense.
I couldn't agree with you more. It's just, it seems obvious to me. And yet Wall Street can never see the forest through the trees, can it? And there's no real money for Wall Street and commodities unless you're buying ETFs or futures contracts or options. But if you're investing in, say, physical gold or silver or, copper, then Wall Street's left out. And they don't like that at all, do they?
No, they don't want to be left out. They don't want to be, they want to make their, every single one of their financial goals, and so be it. I don't think that is something that you can argue with, or really, I wish we could say we could affect it quite easily, but, I don't think that that's practical. I think we have to play you have to play the cards the way they're dealt. And so we have to say, okay, well, how do we make the best of the hand we have, if that makes sense?
Totally makes sense. And so when we have this conversation in January 2025, the market going to be higher? Interest rates, where are they going to be at? And will you have helped your clients achieve their goals?
Well, sure. So, a lot of the clients we work with are in that retirement phase, Kerry. And so they're starting to say, hey, how can I actually live on what I've, built up over my entire life? And so the strategy that has to be employed for somebody in that place, is a very strategic one that's focused on generating income. Maybe that looks like income from a rental property, potentially dividends. I've even looked at some structured notes with clients lately. What I think, though, we need to be careful of is the environment that we're walking into. So presuming that Jerome Powell does do these 3 rate decreases, and presuming inflation actually, stays kind of, well, I'll say under wraps or in this middling 3s as measured by the CPI, that puts us in a place not too dissimilar from where we were last spring, when we had all these big bank busts. So everybody will remember Silicon Valley Bank's name, Signature Bank's name. And ultimately, the antidote to that problem, at least as far as the Fed prescribed it, was the Bank Term Funding Program, the BTFP.
That's really important. And it's still going up every week, right?
Absolutely. So just for everyone listening out there, of course, what that was is the Fed's way of giving regional banks specifically all that liquidity so that they didn't end up like Silicon Valley Bank, having to sell down their depreciated, treasury assets and things that they had bought in 2020 and 2021 when interest rates were so low. And so basically, though, those were meant to be 1-year term loans. And so if rates are in that, similar range as they were at the time, that puts the banks back right where they were. Of course, this was a kick the can down the line solution, as you would imagine. And I think that I'm going to very much be looking for the Fed to extend or revamp that program in some way or another. Otherwise, I think that they're basically putting the nail in the coffin that we're going to be going into a big banking crisis. You could potentially look at a recession even in those scenarios. Because if without that liquidity, the regional banking system is going to be right back where it was, a little less than 12 months ago.
Right. So they bought a little bit of time. Maybe they'll merge out some of these bargains, sure. Right? Isn't that it?
Well, I don't know the exact solution they will decide to use. I think, But I think that they're going to have to do something one way or the other. Otherwise, there's going to be sort of some hell to pay for it, unfortunately.
Yeah. So they haven't solved anything, have they?
No, well, so I think everybody has been assuming, and I think the market's pricing in, that they, unfortunately, I think perhaps wrongly, have aced this quote unquote soft landing. But the hardest thing in gymnastics to do is stick the landing. And I think that we have not stuck the landing yet. I think a little bit far from it, without seeing some real change, at least on the banking side, until that yield curve can get back to, a normal, I'll say, and not be inverted. This problem is going to end up perpetuating.
Yeah. All right. Well, I think we will leave it at that. I think that come next year, this time, probably going to have more of the same, but a lot of it depends what's happening overseas. We didn't even begin to talk about the financial implosion of China. Financial, moral, ethical, and infrastructure. The infrastructure is crumbling before our very eyes. All the glorious infrastructure that they spend trillions of dollars on. And that's a big problem.
And population.
Yeah.
Another thing crumbling.
Hey, a lot of things, a lot of factors. So next time we'll kind of glance on that. Appreciate you coming on again. Just tell us again where we find you, how we connect with you on the web.
Sure, absolutely. You can find us at pinebrookfinancial.com. Kerry, I appreciate your time. Thanks for having me.
All right. Hey, and if you got a question, comment for Ted or myself, if you're wondering about interest rates, whatever it might be, shoot me an email, kl@kerrylutz.com. We'll get you an answer quickly, and you'll find a link to Ted's site in the show notes to this interview on financialsurvivalnetwork.com. Sign up for your free newsletter. Ted, been a pleasure. Really appreciate you coming on, and we will talk to you again.
Thank you, sir. Have a good one.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.